Sales sales refers to the total revenue a company realizes directly from the sale of its products or goods. So the sales, that means the total revenue the company realized, the total revenue the company generated directly from the sale of the goods, directly from the sale of that particular goods. So it means that it excludes any form of indirect revenue. Any form of indirect revenue is excluded when talking about sales. Because when talk about sales, we are talking about direct revenue realized from the sale of the product. Because indirect revenue might be discount received, or maybe rent received from, or commission received. So this, we are not talking about this one. These are indirect revenue. We're talking about sales. So the amount of money or revenue the company generated from the sale of each product is called, they are called what? Sales. In sales, we have something that's called look at this. You see what I wrote there? The net sales. So how do we arrive at this net sales? Because sometimes when you sell something, if care is not taken, maybe you sell something to a customer which is below the standard. Maybe what the customer orders for is not what you sold to the customer. In that case, or maybe the quantity of goods you sold, part of it are not what the customers ordered for. So what happens is that the customer might return those ones which are not part of what he ordered for. So in this situation, when the customer returns it, you have to subtract it from the one that you sold for you to arrive at your net sales. Then that is what they are called what? Returns inward. Returns inward. Then we look at the carriage inward. Carriage inward. So the carriage inward, this refers to the cost of bringing in the goods from the purchase point to the business premises. So when the company buys goods from the supplier, they pay for transportation from that place they purchase the goods for the goods to be transported or delivered to their warehouse in their location. So to transport the goods from the purchase point to the business premise or to the warehouse, so that is called what? Carriage inward. So the cost of transporting the goods. So then, okay, let me read it again. You say that this is the cost incurred by a company for bringing in the goods from the supplier to their revenue. So it is the cost of bringing in the goods. I put it there. It is the cost. It is the cost of, the cost incurred by the company. Now let's look at this. Cost of goods available for sales. Cost of goods available for sale. Cost of goods available for sale. This refers to the total value of goods a firm can potentially sell during the period. So the total amount of goods or quantity of goods which the company can now sell, which are ready, the ones that are ready to sell, to be sold, they are called what? Cost of goods available for sale. So look at how it is calculated. It is calculated as opening inventory plus purchases plus carriage inward minus returns outward. Then it will give you what? Cost of goods available for sale. Opening inventory plus purchases plus carriage inwards minus returns outward. It will give you what? Cost of goods available for sales. Then we look at this one, closing stock. Closing stock, this refers to the unsold stock kept by the firm at the end of the accounting period. So the total value of goods or the total quantity of goods which the company couldn't sell during the trading period. So the one which they couldn't sell, the total one left unsold at the end of the financial year or at the end of the accounting period, they are called what? Closing stock. Then we look at the cost of goods sold. The cost of goods sold, this refers to this involves all the direct traceable costs incurred during the sale of the goods. So we talk about cost of goods sold. We are talking about those costs associated with with the sale of the goods. So those costs which are directly associated, I'm not talking about the one which are not associated, I'm talking about the one which are directly associated with the sale of the goods. So they are called what? Cost of goods sold. Example, cost of bringing in the goods is a direct traceable cost. Then another one is, so any cost that can be directly traceable during the sale of the goods are part of the cost of goods sold. So it means that indirect costs or overhead costs are not part of it. The overhead costs are excluded. So what are the overhead costs I'm talking about? It can be discount you allow to the customer. So this is, this is the part of the cost incurred in the cost of selling the goods, but it is not directly traceable. So it is not, that one it's not a direct cost. So another one is salary paid to your workers, salary paid to the employees, or the administrative expenses. So these administrative expenses, they are not direct, they are not directly traceable to the to the sale of the goods, though they are a cost incurred, but they are indirect costs. That is why they are called overhead costs. So they are excluded. So when you're talking about the cost of goods sold, we are talking about direct costs, the costs which can be directly traceable to the sale of those goods are called what? Cost of goods sold. So the other ones, which might be depreciation, or which might be finance costs, or loan, in all these things, they are not, or carriage outwards, they are not directly traceable. So with all the electricity, office rent, electricity bills, all these things, they are indirect costs. Then you look at the gross profit. Okay, how to calculate the cost of goods sold? How to calculate the cost of goods sold is, you start with cost of goods available for sale minus closing stock. It will give you what? Cost of goods sold. Then we look at this one, gross profit. Gross profit is the difference between the sales and the cost of goods sold. Difference. So it means that when you minus the cost of goods sold from the total sales, you know the difference will be there. The difference will either be gross profit or gross loss. So when the